Hello and welcome to this week's weekly financial update from RTS Financial Planning. So this is where we go through what's happened in the world of finance over the last week and also discuss some of the subjects that our investment committee are looking at as part of the RTS investment strategy. So let's dive in. So over the last week, most of the world stock markets have had a slightly down week, apart from the US that is still riding pretty high. As mentioned in last week's update, there was an important US economic conference last week, which the US Federal Reserve Chairman Jerome Powell made an announcement on the central bank's strategy going forward. So previously, the central bank's target for inflation has been 2%. They aim to keep inflation around 2%. And that means that if inflation goes above 2%, they usually tighten monetary policy, which could mean raising interest rates. And if inflation was to go below 2%, they would loosen monetary policy, which is typically lowering interest rates. Well, now they're going to go for an average 2% inflation target, which means that they'll allow inflation to run higher than 2% for a significant period if it's followed periods of very low inflation like we've had recently. So this will be interesting to see how this develops going forward, and it's something I think we will see in the UK and other countries around the world. So now the attention for investors has turned to a new US stimulus package. So the US, like other countries around the world, have been pumping lots of money into the system to try and help support the recovery from the coronavirus crisis. This money is sort of drying up in the US, and job growth rates and consumer confidence is stalling in the US while we wait for this next package from the US government. The package is currently held up in Congress whilst the government sort of argues over how it should be implemented, but investors will be keen to see that announced shortly. Over in China, we saw that a survey of manufacturing firms showed that manufacturing activity is expanding at its fastest rate since 2011. So it's positive news for the Chinese economy, and obviously then will have a knock-on effect for the rest of the world. And it's also been helped by a rise in orders from the European Union, which is a big customer of Chinese manufacturing. So this is good news for European economies and Chinese economies because it shows this growth is starting to happen. Over in the UK, we saw this week that the nationwide house price index indicated that house prices had gone up 2% over the last month, and that's the fastest rise since February 2004. And it now means the average UK house price is around 224,000. And in the UK, we also saw headlines this week around the upcoming budget and a potential tax rises for businesses, pensions and people with second homes. Now, these sensationalist stories and headlines are not really useful, particularly around budget time, as it's right for any government to review all taxes before any budget, but this doesn't necessarily mean changes are coming. Yes, the government has built up a large debt pile from the coronavirus crisis, and it will need to repair its finances at some stage. But this doesn't mean tax rises, and it certainly doesn't mean tax rises anytime soon. There are other ways the government can reduce the debt it's currently got itself into. And I've recently wrote an article on this, which you'll find on our website, rtsfinancialplanning.co.uk, which just provides some interesting insights and historical evidence of how the UK has got rid of its debt in the past. So when there's an upcoming budget, the way to deal with the budget is as follows. Firstly, you need to have a clear objectives and a plan in place for your long-term financial future. When the budget happens, review what's been announced in the budget, look for opportunities, look for threats to your financial plan, and if, and only if, there are some threats or opportunities, that's when you may consider moderating or changing your financial plan. There's no need to do anything beforehand because you're just guessing, and it could be costly to get the guess wrong. So I hope you found that useful. As always, please leave comments and do subscribe to our YouTube channel. We do produce a number of videos every week, so you'll be notified straight away when a new video goes live. But until next time, take care.